Hello guys, I hope today you had a great day. I managed to catch some trades and mainly they were for the New York session. I pretty much had nothing in the London session, and on the New York session that's when I managed to get 5 trades. Okay, I'll go ahead and explain everything, how I anticipated the trade and how I cut in the trade with my stop loss and my take profits in position. Okay, so I'll start with euro dollar. As you can see from the overall trend of the 1 hour, we're in a downtrend. So when I'm in a confirmed downtrend, I want to look for some stop and high drop where the market will push up for a pullback and it allows me to end. So it's something like this in an uptrend. Okay, so I want to be involved in the sectors of the markets at these points here. And pretty much I did that yesterday, and also today there was something on this position here. These were the sweet spots where I could find the highest point, which is the highest pullback of the downtrend, and I managed to sell. So I'll go ahead and show you how it was looking like in the 15-minute time frame. I used the 15-minute time frame for my entries. So this was from yesterday. I always talk about this, and I will always continue to. Understanding the market patterns is the basic you need, and you need to understand how the market is structured. I always say it as the day progresses, we have something like this: stop and high, aim formation, then drop. It will end back in consolidation. You wanna be a seller in here, and you wanna be a buyer in here. As I'm gonna show you on this trade, I pretty did the same thing I'm going to talk. Okay, so here was the consolidation over here. The market is in consolidation, and there's pretty much movement. Less movement is the banks accumulating contract, doing circular trading against trading with each other. So they are creating a range so that they can accumulate the contracts. Then what's next? They are going to fake everyone out so that the people take the wrong bias of the market. So during a sale day, they want to make us retail traders think of buy. So to be good in the game, we want to think like them and follow their footsteps. They did not disappoint, as this was the stop and then the down. So you want to need this M formation on the second leg. When the second leg is formed in here, this is when you want to fill in your order. This is the sweet spot to sell and the highest point on the chart where you can determine a stop loss and take profits for the easier and big risk to reward ratio. If you can sell with a stop loss of maybe 5 pips and you can make 50, that's 10 to 1, and if you can make 30, that's 6 to 1. So keeping your stop loss tight is what you need, and it's gonna make you profitable, because you can lose 3 trades or 4 but still be profitable after one with a 5 to 1 risk reward ratio. This is the story, guys. So after I got in the trade in, I got in soon as this bar was about to close, and I think it was maybe something like 25 seconds from time for the bar to close. It was solid green like this. I knew that something was going on, and they were trapping people on the last seconds of the bar so that they can use the back side of the candle. So what the back side of the candle is something like this. Okay, let's consider maybe a 1 hour. Somewhere around on the 59 minutes, if they are after 59 minutes and you only have 1 minute to go for the bar to close, they will use the back side of the hour. So what they will do, they will have a solid green or red candle standing up big people pile on thinking it's going the other way. Then on the last seconds of the bar, they are gonna pull down like this. So this is where the wick will come in, and you have kind of a hammer hanging with all this trap volume the dealer has trapped and is ready to go. So after I got in here, my stop loss was tight above the high of the day, 5 or around something. The stop loss was here. This is your SL, your entry. You can see it. You can't pick a better entry than this one. And for your take profit, you can use the count, which is 1, 2, 3. Be able to exit in here, or maybe here, or use the end of the day time frame. I did not exit this one because I wanted to record it for you. I will exit all the trades soon, since I don't carry over trades into the weekend for some reasons. I know the dealer can give you, which is their way to make money as soon as the market opens. Okay, so this is our money. So I now have my stop loss over here. So this whole area is profit. This one, there's nothing I can lose over here. I've already secured this one 23 pips I have already, but I will still close them with a what, with a big profit. Then on today almost the same thing happened, guys. You can see you pretty much have this consolidation area here. Sometimes I enter into the trade early. It happens. It happened today, but as you can see, I explained to you why. The M formations, you get a perfect M like this. Okay, almost equal these legs, and you got one with a first sharp high leg, and the second one comes a bit lower, and you get the third one where this one is a bit smaller and now high. This is what exactly happened today, and I thought maybe this was the trade I got in. It's this one, as this was forming, but as it later developed during the day, it ended up having another second leg in here to go down. So after that, I was able to enter right on this red candle after it was formed. You can see this was mixed up with the New York session opening. I'll try to load my template for you, the one that I use, this one. You can see what we have in here. Where is my pen? Sorry. In here. Two red bars of opposite colors. I will call that an RRT. This one. And if you want to look at where it is occurring at, it's occurring at the 200 EMA. This one. You all know that moving average dynamic support and resistance, they tell you points to sell and points to buy, since the dealer likes to trap in these trap areas. You can see that price is coming back, and I need to get out in these trades as fast as possible, because I'll end up with a loss. So they say another trade, it was euro pound, pretty much the same thing. Here you have a clear downtrend. This is a clear downtrend what we are having, and you want to look for a pullback so that you can sell at the highest point. This is the concept that I'm trying to tell you, and I'm trying to teach to some of you. So it was much clearer on the 5-minute time frame. This is almost similar to what has happened on Euro USD, but this one I managed to catch the right end, because it was a bit different from that one. You have your consolidation area over here. This is the stop point. This is gonna be 1, 2, then 3. You want for them to form a second leg around this area. Look the momentum that they have when they came around the area and they just break up high. Now they stop here. When they stop here, can be a seller right away, but I don't recommend it because it's gonna cause some problems to be sell in here. You have to see it through all this. So you wanna wait for another M formation like that. So it's gonna be like 2 M's inside each other with this one. The second leg of the first M being higher than the first leg, and with that second leg having 2 legs inside. So you can see that we have an M in here inside of what? A big M I had anticipated. So I was able to sell right away on this red bar when they shifted away the zone. Call that a shift candle. Are able to sell on a shift candle. Then GJ is interesting because I'm looking for the overall trend for the next week to continue up, maybe until they reach this area, somewhere around in here. This is what I'm looking for. So I want them to go up higher. So for the next week or so, I'll be looking to buy pound yen, and I'll need for some stop and low rise. That's what I'm looking for. So for pound yen, we'll be looking for something like this: consolidation, stop and W formation. Then I'm a buyer in here. The sweet spot and safest spot to buy with my stop loss being here. Take profit set higher. Okay. So let's go to the 15 minutes and explain, and I'm going to explain to you how everything played out as I'm talking, as I am speaking right now. Okay, so this is what we have. The beginning of the day, somewhere in here, before the consolidation starts, and the market enters into a chunk, starts to consolidate, but right away around London session opening, there was this breakout, and then it trips again, and then it goes. I want to count up to 3. You will see why 3 is important, because 3 is a psychological number. If something happens to you 3 times, you're gonna believe that maybe it's gonna keep happening, or it's gonna keep on going, and people start to chase price after it breaks out the wrong way 3 times. Think of this: someone is trying to sell something to you. It comes the first time, you say no. It comes back the second time, you say no, and it comes back the third time. For the third time, you will say yes for some no reason, because you already know this sales guy. So they are trying to show you to go the short way. You can sell this move, but that is for advanced traders, and I will talk more about that. If you want to hear, keep subscribed to the channel. So I was able to enter right here when this doji was forming. It was more self-explanatory on the lower time frame, which was the 5-minute, where we had in RRT. One of my favorite candlestick patterns, where the dealer traps back with 2 equal bars. He went in and it goes out. That's what happened here. Stop loss below the low of the day. No mistake, guys. I don't want you to be in a scenario where you end up setting some pretty much big stop losses. So you want to set a smaller stop loss. For me, the least mean stop loss is 23 pips. That's the maximum value I can use. Okay. Then pound odd, I had another buy similar to pound yen, and I ended up scaling on this one. And if you want to know how I ended up scaling, I scale using the TDI. So here's what happened. Looking on the 4-hour time frame, you can see we had this peak inserted 30 January, and then the market start trading lower. So this is where you find the strongest support and resistance at the low of the week, yeah, or low of day, something like that. The lowest points on the charts are the most likely areas for the market to reverse. So I was able to catch it at the low. Look, when the week started over here, pretty much they could not manage to break this low. So I always want to trade away from the peak. So if the peak is peak low, I'm a buyer. If it's a peak high, I'm a seller. That's the simplest definition of how I'm going to define it for you. And looking into the 15 minutes, the same move, this was much clearer for me. I could see that I had some consolidation in here, and the market started off to drop in through this third one, ended being a pin and green, but it came back again right here around US open. I'll talk much about the market maker pattern and time, how you can use these two things effectively. If the pattern is occurring at the right time, guys, it's lights on. Think of this. They have trapped everyone before the new session, so they are going to pull away from those people getting into the new session, trying to chase away the move. I was able to buy here. The stop loss was here at the below the low of the day. Now you can see all my stop losses. I've protected all my profits and can't make a loss anymore. On the second trade, the one that I ended in here, I said I'm going to explain it to you. Let me change the template and put the TDI. Maybe you want to know why and exactly how you use the TDI to get in and get out. So before I did that, and when I entered that trade in here, this one, my color, sorry, yeah, I hope you can see. This one looks better. This trade in here, I was able to scale in using the TDI, but it went up for a drawdown here. It did not hit my stop loss. I was still fine, and you can see in here my first trade is 65 pips and the other one is 64. The scale in, as I told you, I'm going to close them now. So what did we have here? I was talking about to scale in, and I scaled in right here. As you can see, the RSI line, this green line here, try to cross above the market baseline. That's what when I entered another buy, I went into drawdown over here, but my stop loss was here, and this other trade stop loss was 8 break even, so I had nothing to lose at this moment. It went for a drawdown, but the perfect end after that, it would have been here, but I was already in the trade. I had nothing I could do. There was nothing I could do, so I ended up sitting through all this 1 hour drawdown, but it ended up being a 44 pip trade. Thank you guys for watching. Make sure to like, subscribe, and keep the comments coming. Thank you.